you've been dreaming of trading traffic for trails and big city noise for mountain scenery, Hendersonville, North Carolina might just be calling your name. Today, we're diving into the 2025 mid-year housing update for Henderson County so you can make confident decisions in this market. Hi, this is Ryan, and along with my wife, Suzanne, we serve the upstate of South Carolina and Western North Carolina from Greenville to Asheville and everything in between. And we've helped buyers relocate from all over the country to our scenic and friendly towns and city. Now, let's dive back into the market update. Before we get into what's happening in Henderson County, let's just zoom out and talk about the broader U.S. housing market and stay tuned for the end for that local take. Understanding the national picture helps put our local trends into perspective. So far in 2025, home sales across the country have stabilized from the pandemic surge, because let's face it, that just wasn't a normal period. We're looking at about 4.2 to 4.4 million homes annually sold, down from the peak of 6 to 7 million that we saw before. That shift is being driven by two key things: higher mortgage rates since the start of 2023 and a lock-in effect for existing homeowners. Most homeowners have rates under 5%. In fact, 74% of them. So even if they'd like to move, many are choosing not to because they're trading their 3% mortgage for a 7% one, give or take. That's what's been holding back inventory in many parts of the country, and it's part of why affordability has become one of the biggest challenges in today's market. However, inventory levels nationally and locally have increased to levels not seen since 2019 as we speak. And with that, there's more pressure on negotiations and pricing. But let's be real, 2020 to 2023 was anything but normal in real estate. So we're just really getting back to a more stable market based on historical norms. And affordability is getting squeezed from multiple directions. Home prices nationally are still near 10% above the long-term trend line compared to the historical average of about 4% appreciation year over year. The median home price is sitting around $418,000, which is a big jump compared to just a few years ago. Now you layer on top the mortgage rates that are hovering between 6.5% to 7% lately, and that's the highest we've seen in over 2 decades for this long of a stretch. The result, homeowners of today are spending around 32% of their income on principal and interest. That's right back to where we were in 2006 before the housing crisis. But let's not mince words here. It's not a bubble situation. Lending practices are much stricter today, but it's creating real headwinds for buyers, especially first-timers. And it's not just about the cost of borrowing. Insurance costs are climbing as well. As of April 2024, the average year-over-year increase in homeowners insurance premiums was almost 11%. That's nearly 5 times higher than the normal. If you're really relocating from a high-risk area, say like Florida or the West Coast, you've probably already seen what that looks like. That's one reason more buyers are seeking out areas like Western North Carolina, where the risk profile and the costs tend to be lower. Now let's talk a little bit about inventory. Nationally, we've seen months of supply climb to around 4 to 5 months. That's still technically a seller's market, but just barely. Balance is considered 6 months, but the data shows we've been hovering well below that since 2012, which is part of what caused the massive price run up during the pandemic. We're finally starting to normalize a bit, but we're not back to historical levels yet. It's also worth mentioning what's happening on the economic front. The GDP growth is modest, around 2.5% to 3%, which is decent but not explosive. Unemployment remains low, hovering around near 4%. That's good news for housing because people still have income and jobs, even if consumer confidence is a little shaky. Inflation has cooled too significantly from the highs we saw in 2022 and early 2023, but we're still not quite there at the Fed's target rate of 2% for inflation. That's why mortgage rates haven't come down more quickly. And let's not forget the demographic shift. There's a massive transfer of generational wealth happening right now. Baby boomers still control about 85 trillion in U.S. assets, and 19 trillion of that is just in real estate alone. Many of these homeowners are either passing property down to their kids or cashing out to relocate or downsize, or maybe even helping their children purchase homes too. And as you might have guessed, mountain towns like Hendersonville are high on the list of places they want to be. So, to sum up, we're in a period of transition. Mortgage rates are holding many sellers back, but buyers still need homes, especially those relocating, retiring, and working remotely. Inventory is rising slowly, affordability remains a challenge, and insurance and regulatory costs are adding friction to that entire process. But for people who are relocating from high-cost, high-risk states, Western North Carolina and Hendersonville are looking more attractive than ever. And that brings us back to Henderson County. Let's get local. Let's shift gears and talk about what's happening right here in the mountains in 2025. So year to date, June 2025, closed sales are up 9% to this time last year. I know, that's amazing. You probably don't feel that way, but we have closed more homes to date in 2025 than in 2024. We've also seen a 14.5% jump in new listings, more inventory, meaning buyers have more options to choose from. But don't let that fool you. Homes are still moving. Pending sales are up 5%, which tell us that demand is still strong and steady. And we've had 9% more homes sold, like we said, year to date. But let's talk a little bit about price now. The median sales price has dipped slightly, about 2.1% down from the same time last year. And that puts us sitting at about $440,000, give or take, for the median price. Meanwhile, the average sales price is holding steady around $509,000 with only a small dip of about 1.4. So what does that really mean? We're likely seeing a slight softening in pressure, especially at the low and mid-range. And higher priced luxury homes are selling and bumping up that average compared to the median. Inventory locally is also significantly up to the tune of 42.5% year over year. So you're probably seeing a lot more for sale signs in the yards as you drive by. And the month supply of inventory has jumped from 3.7 to 5.1 months, meaning we've entered more of a balanced market, finally giving buyers a bit more choice and leverage. And to be honest, it's feeling a bit more like a buyer's market lately. That said, homes are taking longer to sell. The days on market rose from an average of 46 days to 63 days, and we're seeing buyers negotiate a bit more, with sellers receiving about 95.7% of their original list price. That's down slightly from last year, but it's not too far off of our historical averages here. And for buyers, that's good news. More inventory, longer days on market, and slightly more negotiating power, it's finally equaling out a little bit from where it's been. And it's a great time to step in before competition with other buyers starts creeping up again, especially if those interest rates actually do drop. And for sellers, the condition and pricing strategically, the two factors you can control, are critical, along with being comfortable with today's timing, which is just going to take a little bit longer. Homes that show well and are priced appropriately are still selling, and faster than you expect in the right neighborhoods. Now let's talk about the why. Why are so many people still relocating to Hendersonville? It's really one word: lifestyle. You get 4 mild seasons, easy access to Asheville and the Blue Ridge Parkway, charming small town vibes all over the place, with vineyards, with farmers markets, and festivals all year long. There's always something to do, see, or hear. We're also seeing more retirees and second home buyers entering the market. Many are coming from Florida, Texas, and California. Again, those states that are a little bit more challenged with insurance and cost. They want cooler summers, lower property taxes, and a more connected and outdoorsy community. Plus, Henderson County's healthcare infrastructure is pretty solid. Internet access is pretty widespread, and you've got hiking trails, golf, and live music just minutes from downtown. So let's net it out. What's our advice? Don't try and time the market. Marry the house, date the rate. You've probably heard that saying before. Find the right home that fits your lifestyle, and know that you can always refinance later, hopefully when rates become a little bit more favorable. In fact, as I'm recording right now, the consensus is that we'll see a rate cut on the federal funds rate in September, which hopefully will give us a little bit of a relief on the 30-year fixed mortgage rate. And if you're thinking, well, that's easy for you to say, it's the exact strategy we decided to use on a property that we bought at the end of last year. And if you're selling, prep your home well, price it right, and work with an agent who knows the nuances of this local market, because not everything is equal. And that's where we come in. If you're thinking about making Hendersonville your next home, we'd love to help. Reach out and let's talk about your goals, whether you're 6 days or 6 months from moving. So that's really a wrap on the mid-year real estate market update here in Hendersonville and also a little bit nationally. Drop a comment below and tell us what is the most important consideration in this market for your home buying or selling. And make sure to like this video and subscribe to our channel. And we look forward to seeing you in the mountains.